I guess, can it in and of itself improve data security and privacy? I'm not sure. The regime itself obviously contemplates the existence of local privacy regimes here in Hong Kong and the need to comply with those. So it creates an extra incentive, I guess, in that privacy infractions will not only be a breach of the privacy ordinance, but they would also be a breach of your licence conditions. So I guess in that respect, it does create an extra legal incentive for compliance around this issue. But I don't think we're seeing a lot of businesses actually focusing on those privacy issues in the context of their SVF. It's really just the same old privacy requirements that we understand exist in the market. Whether or not these new types of players represent an enhanced cyber or privacy risk is going to be an interesting question. In terms of practical loopholes, well, around AML in particular, we do have a staggered regime where different thresholds of spend require different levels of AML clearance. And at the lowest level, there is no requirement to actually do an AML check. So you can be a stored value facility service provider and offer services to clients at the low end in terms of value with nothing more than their phone number. Now, in the Hong Kong context, phone numbers can be anonymous. You don't have to actually be pre-registered. You can get a prepaid anonymous phone here. So really, there is a way of actually accessing stored value services at the lower money end without any AML compliance whatsoever. Obviously, that steps up as you move up in terms of thresholds, individual transaction values, aggregated transaction values. Then what we see is the need for higher levels of AML. Those checks are comparable, if lower than the requirements of the authorised institutions, but they are, however, more robust than perhaps, again, the lower levels such as the money service operator licence, which is regulated by Customs and Excise. It is a step up from that in terms of AML compliance requirements. But as I say, it does depend on the level you're operating at as to how much compliance is required and how much you need to know about your customers. It is an interesting question. The reason is that funds remittance, so the sending of money in and out of Hong Kong, facilitating the transfer of money in and out of Hong Kong, including the foreign exchange activity around that, is not a HKMA regulated activity. It's regulated by Customs and Excise. So a lot of the conversation we're having with clients has been, we just do remittance activities. And then the question is, well, are you really just doing remittance activities? Because if you're storing that value for any particular time, you may find you're now in stored value. And that's been a bit of a surprise for some organisations that think they're just requiring a money service operator licence, whereas in fact, depending on what you're doing with that money and any sort of storage and the ability to use it to pay third parties, as opposed to pure single payment remittance, no storage time, takes you into the SVF regime. So that's kind of a three-tiered system now with the MSO licensing regime, the stored value licensing regime, and then the authorised institution full banking licence. So because of that, that's why we have AML checks at the customs level as well. It's a good question because I think what we're seeing is organisations that are not necessarily startup in the true startup sense of the word, but we're talking about a lot of organisations that are newer than banks that have been around for a very long period of time, have very well established compliance procedures, perhaps have very rigorous anti-money laundering procedures that they've worked up over a long period of time. They know who their customers are. They have IT departments that have been panicked about IT security and data security for a very long period of time. So I guess what we do potentially have a situation where newer companies with less maybe investment in these areas around information security, there is a theoretical risk that what we're doing is enhancing the possibility of a cyber threat or a data leakage. What I would say though is, as part of the SVF application process, the MA has been very hot on understanding what your security procedures are. And they are making sure that as part of your application process, in order to get the licence, you're able to evidence that you've got appropriate levels of security in place. While I guess the converse argument about traditional organisations being well set up to do this, I would categorise the cyber risk as a very fast-moving one that requires a nimble organisation to deal with it. If I'm talking about a multinational bank versus a new IT company, actually there's a good argument that the new IT company may be well placed to deal with the evolving cyber threat and quickly moving to things like patching when there is a problem, such as we've seen last weekend. There's a good argument actually these new companies are better placed to deal with this than more substantial multinational companies.